Hi, everybody, and welcome to this week's oil and gas rundown here at King Operating. My name is Rachel Griffith, and I'm a senior vice president here. Of course, you are joining us live. Thank you so much. Or if you're watching this on the replay, we're excited today to be sharing some news with you and some information regarding the oil and gas industry, which we do with our incredible team here at King Operating. We'll be having our founder and CEO, Jay Young, with us today. We'll also be having Aaron, our land manager, and Kelly, our senior VP of operations. So, gentlemen, welcome to the show today. Thank you so much for being with us. Of course, like I said, if you're joining us for the very first time, you can always find us at kingoperating.com to learn more about what we do here. We're based in the lovely Dallas, Texas, or actually, well, it's Addison, I suppose, but we can say Dallas. So, Jay, we are going to roll along with some news from, well, actually, Jay, say hi to everybody. I know you've been busy. This is a big video.
Hey, everybody. Jay Young here, King Operating. Love my time here, man. We're doing some great things in the field right now, and I know we're seeing a lot of volatility in oil. And I did put out on Twitter or X and LinkedIn today, hey, you know what? Oil prices, I guess because they're opening up the government, Rachel, I guess they're opening up the government, so everybody's like, hey, man, I don't know. It would seem to me like people would get in their cars and go crazy driving around, and spending money now, and it would consume more oil than because that's why oil prices are down $2, because they said that we're because of that because we're opening up the government, we have a glut of oil. Now I don't understand. How do you get a glut of oil from opening up the government? I don't know. We don't open up wells just because the government's opened up, but anyway, it is what it is. Let's wait to see what Billy Bob Thornton says this weekend on Landman.
That's right. Yeah. No, exactly. No, I'm not sure either, since our government actually isn't supposed to control necessarily the flow of oil. I mean, I lived in a country where the government did control energy, but not here. So I don't know why the shutdown would do that. But Jay, I mean, we've been seeing oil prices bouncing around this month. Mm-hmm. So we think the volatility is the government, any other factors that play into that?
Yeah. Well, it's all cyclical. I mean, fourth generation, I've been in this business, since I was whatever. And I feel like King Operating's almost 30 years old. We're going to our 30th year now. I was in it 5 years before that. I grew up in the oil patch, my great-grandfather or whatever, but it's cyclical. It's going to come up. It's going to go down. If you look at the average price for oil in the last 20 years, it's like $73, $75, something like that. It's going to come up. It's going to come down. When prices get too cheap, they start – they start cutting back on the flow of oil from OPEC, and it's like, wait a minute, we need to make some money. How can we make some money? And so they do things in the world to raise the price up. So they want to keep it down right now because they like it when the United States is not drilling for oil, which is what's happening right now. Rig count's down 44% in the Permian Basin in the last 2 years. 2 years it is. So therefore, you're seeing a lot of people that are not drilling for oil and gas right now, and what happens there is it takes that oil off the market. When you take a rig off the market, and in this case, several dozen rigs in the Permian Basin, when you see that, you're seeing less production. It's a leading indicator, indicator saying, okay, we're going to drill with less rigs. What that means is that we're going to have less oil coming out in 3, 6, 9 months. So when you have a lot less wells that are coming online and wells decline 40% the first year, you're going to see people scrounging for oil come first, second quarter of 2026. You're going to see people going, wait, where's that oil that we thought we were going to have? Because demand's not going down anytime soon. Demand's going to continue to rise, and OPEC's going to go, yeah, we're good at $50, $60 oil, $70 oil. Let's just cut back more. Let's bring that price up because we don't have the oil in the United States. So, hey, they take advantage of us. They really take advantage of us, and because of oil price, they'll they dumped a lot of oil in the market right before COVID. I mean, they were saying, let's dump a lot of oil in the market right before COVID because we want to see these shale drillers in the Permian Basin go out of business because they know that shale drilling needs $60 or $50, $60 a barrel. So they flooded the market with oil. And then all of a sudden, our demand went to almost zero during COVID. So therefore, prices went below zero for a little bit. And then they came back, and everything's fine now. And still during that time, we averaged $70 a barrel. So, man, it is what it is. When people say, I want to invest today in oil and gas because the price of oil is $70 or $80 or $60 or what. I mean, it's like, I'm not going to invest in oil because it's $50 a barrel. Craziest thing I've ever heard, unless you're trading commodities, long-term commodities. You want to buy low, sell high. That's what we do. Buy low, sell high. You want to develop it while prices are cheaper, so we can develop those assets and sell them to a public company.
Absolutely, Jay. So we already talked about this a little bit, but just going back to rig count. So are you saying you're seeing, some of the rigs coming off production in the Permian Basin, or can we expect that to increase? Is there going to be an uptick, or what are your thoughts there?
Oh no. When rigs are normally, they get them for 6 months, a year, 2-year contracts. When those fall off right now, they're not going to come back. They don't need to. Public companies, big oil and gas companies right now. I mean, companies with 15, 20 rigs, they pretty much have. That's what Kelly's doing right now. Kelly's got a good handle on 2 rigs for us, one in Amarillo on that Bivens Ranch, and also one in the Mid-Continent section that Aaron's worked on, and that's great. And they're seeing, and Kelly's like, I can get a rig anytime you want. Just tell me when and where, and I'll bring that rig over. We'll start drilling. So rig count is out, and it's not. We're not coming back with rig count. You probably won't see rig count go again until prices start to come up. And it's not because of economics. It's just it's economics is what's driving it, which it shouldn't. It should be developing assets. But you have a lot of public companies and you have a lot of shareholders that are saying, well, we don't want rig count to increase while the prices are down. And I'm like, man, we want to develop oil and gas while prices are down because it's a lot less money. When you have 5 rigs sitting in the yard, Kelly likes it when he's driving up to a yard and there's 5 rigs sitting in the yard right there, and he just goes, okay, how much is that one, that one, that one? But if he goes out there to the yard and there's 0 rigs out there, Kelly just keeps going. He's like, we're not negotiating with them. We're not negotiating. They're going to negotiate us. We're not negotiating them. So you like to go by a yard where you have several rigs just sitting there, and those they're putting those. They don't want to lose their hands. They don't want to lose those crew members. As you watch on Landman, they don't want to lose those crew members, so they keep them working. I mean, they've shined up that rig so many times. I mean, they're keeping them doing something just to keep them working because they don't want to lose them. If you lose a rig, hands on a rig, I mean, it's like you can buy a rig for $1 million, but you have to pay $3 million if you want it fully stocked with people that are working. Is that about right, Kelly?
Yes, sir. That works.
Yeah.
Kelly, how are we're going to talk to you. Thank you, Jay, for that. We'll come back to you in just a little bit, but we're going to talk to Aaron in a minute. But Kelly, I know Aaron can negotiate. I mean, that's part of his job. And we're talking about a landman, but how are your negotiation skills?
That's a big part of my job. So I'm a 3 bidder. So almost every single service line, and Jay and I both talked about this before, there's upwards of 30 to 40 different vendors on a drilling or completion operation. And so that's 30 for drilling. And matter of fact, this completion we just did, I only had 3 of the 30 vendors were overlaps from the same companies that did both drilling and completion. So a lot of different service companies handle one side or the other. And I'm been doing this 25 years. I use two methodologies. So I 3 bid everything at a minimum of 3 rigs, 3 cement companies, 3 casing companies, 3 to 5 drill bit companies. I table all that. I put a little engineering twist on that. And that's my technique, right? These people know that they're not getting the work right away. And I'll call them and tell them, man, you're close, but somebody's got you beat. And then maybe they'll come down And a big part of what I do also a lot of service quality. So I weigh the factor of service quality. So if somebody's not the best price, but they get the best service, I'll work on them and see if I can get that price where their price and quality match up. So I do a lot of negotiating before we start the well. That's the kind of the phase I'm in today. I've had 4 vendor calls and 2 vendor face-to-faces today, just trying to get people lined up for our project that starts in about 30 to 40 days.
I love that. Kelly's also a negotiator. We got some good negotiators
Well, we
on our
do.
team, Jay.
Jay loves
Hey,
it.
we
The
got good
negotiation.
people.
I know. Hey, it is.
Oh, dude,
You
just-
get 3 bids on
Good.
things. It doesn't matter. I mean, you can be your light guy at your house or the lawn people or whoever at your house. And you go, okay, great. Give me your best bid because I'm going to bid you out. And they'll go, whoa, wait. We didn't know you're going to bid it out. Let me give you another price. You know,
Yep.
I'll give you my one bid price. I'll give you my 3 bid price. You know, and it's probably 20%, 30% less. You know, that's just the way.
Oh, yeah.
That's the way they are.
I
And
mean-
another big part of our bidding process for services is and Jay's talked to us before. You know, before I was ran here, I ran a consulting firm. So having a pulse on the whole industry as a whole, and a lot of those consultants still are loyal to me, and so I know what the going rate for things are. So I'm pretty good right away. Like say that your Ford F-150, they're going for $85,000 right now, but really good and well because you're in the car business that they should be 65. So that's a big part of what I do here too, and keep my networking skills up. Other operators, and we kind of talk around. We're not giving trade secrets or anything here. Just with the state industry, I should know what drilling rigs, what for different level drilling rigs should go for. No different than, like I said, than shopping Ford, Chevy, Toyota kind of thing. I should know, and that's kind of what I'm doing. Look at the 3, and sometimes I'll pay more if I get more, but just the low bid is not the only thing. But having to know what the real going rate is out there right now, like Jay said, the bid price as opposed to the monopoly price. So nobody does work for me that has a monopoly on anything. If I can help it.
Yeah.
Good thought.
Well, Aaron, this is part of your job as well, is being a negotiator. We're actually going to talk about some terms and some things about being a landman today, but this is probably a skill that you're very familiar with. I mean, you negotiate with people all the time.
Sure. Yeah. Mineral owners, surface owners. Yep. It's part of the job.
Hey,
Yeah,
that's what Aaron does. If you watch Landman, which I'm sure you are, if you're not, you should. But that's what Aaron does. Is he's Billy Bob Thornton's son, Tommy Norris. It's his son, and that's what Aaron does. And Aaron goes out when the geologist says, "Hey, there's a good project out here, and we see some good well control. We want to put some horizontal wells out here." And then what? And the geologist will say, "Here it is," and the engineers will make sure the financials work. And then when that's done, then they go, "Aaron, come over here. Go out there and lease as much acreage as you can get around this." And they'll draw a circle around an area, and they'll say, "Hey, go get it." And then Aaron will go out and make that deal with the landowner. Like I forget Tommy Norris's or Billy Bob Thornton's son's name, but anyway, whatever and that's what he was doing at the end of the first season. Was he was going in there talking about negotiating with this guy, and he said, "I know you'll take 15, but you really need 20. You need to negotiate this." And he's getting a little bit ahead of himself, and it's going to bite him in the ass. You watch next season, but yeah. But anyway, that's what Aaron does. Aaron's that guy, and Kelly's our guy that does financials, but he also, most importantly, Kelly in the organization is the driller, and he's the guy that when the geologist puts a stake out there and says, "Drill a well right here," Aaron leases up the land from the landowner or the surface owner or the mineral owner, whichever one it is, and then Kelly says, "All right, well then here's the spot. I'll bring you in a well," and he drills and completes it. Just a little FYI there for people that didn't know, or if you're
Aaron,
curious.
Yeah. No, I love the circle. It's very it's all interwoven how they work together. They're basically like this. They're like combined. Everybody has to work together. Everybody has to be in rhythm, shall we say? And if you guys aren't in agreement on something, I'm sure that takes more discussion and more dialogue. And but I feel like you guys are a great team back there. How many times y'all get in fights a week?
Once a week.
Aaron's the mean one in the office.
Oh yeah.
I'm the big
Once
ugly
a
one.
week.
He's the mean one.
I knew it. I
See,
knew
just
it.
ask
I knew
you-
were
ask you-
wild on that side.
Just ask you how many people have hair in our office, and then we'll talk about it.
We're short on that. The operations team's kind of light on hair these days.
Oh my gosh. Yeah, you don't go to our
Yeah.
you don't get three
I think
bids on
Aaron has the most
haircuts.
hair.
Get 3 bids on haircuts in our office, man. You'd go broke. Anyway, I'm sorry, Rachel. What do you?
Aaron.
Yeah.
No, back on track, Aaron. I want to talk about, so of course, we talk about Landman a lot, and that, still has a lot of Hollywood wrapped up in it. Let's talk about some of the terms,
Sure.
practical and real terms that people don't understand in, the landman position. What are some real terms? And we're also going to talk about the Railroad Commission, which I'm actually really interested in. No one would think, I would have never thought like the Railroad Commission has so much to do with oil and gas. Like it seems completely separate. So I would love for you to just talk about terms and concepts, talk about the Railroad Commission, just give us some good education besides
Yeah, sure.
Hollywood.
Yeah, sure. Let me tell you a little bit about the Railroad Commission. I remember when I started and the first time I heard it, I didn't understand what the guys were saying when they said, we got to deal with the Railroad Commission. But it's the Railroad Commission of Texas. And they were established in 1891, and they were regulating the railroads. All it was all this vast land, and the railroads were expanding. And so that's when the Railroad Commission formed. Now, once oil production started really picking up pace in the early 1900s, I think it was right around 1919, 1920, that's when the Railroad Commission kind of shifted in to this new position where they regulate the state's oil, natural gas, pipelines, and then when you really notice it, they're making some huge differences. So what was happening is, I want to say like the 1930s, there was the big East Texas boom. And these guys were just coming in here, putting up rigs. I mean, there might be 1 acre and they'd put a rig right there. And you'd have these rigs just stacked all right next to each other and producing as much oil as possible. And so prices collapsed. I mean, I don't know. They might have, back then prices were a lot different. They might have collapsed from like $3 to 5 cents. I mean, it was something really drastic.
Yeah.
So basically what happened was that is when the concept of pro-rationing stepped in, where the Railroad Commission saying, listen, you can only produce this much oil and you're going to have to produce it in this spacing. Mm-hmm. So that all of a sudden, you see those pictures of just all those rigs taking up a whole town. Well, that's when it went away. And the whole idea was we needed somebody to come in and stabilize the oil industry. And that's what the Railroad Commission did. And the Railroad Commission, I mean, from the 1930s to 1960s, I mean, I can't tell you how powerful they were. They controlled the world's oil prices. And
wow.
They did that until around 1960. And that's, of course, when OPEC was formed. And we know how dominant they are in today's oil industry as far as setting prices. But, the Railroad Commission, I kind of think of them as like on a state level. To me, they're almost kind of like the IRS, where, everybody loves to complain about them. But, these systems are in place so that everything works properly. Mm-hmm. And that's kind of what the Railroad Commission, they're there to regulate the oil and gas business. And I know the type guys that are in the oil business and are, the wildcatters. I mean, they need some regulations in place to control this group. And so it's really, I think of them as more as a partner. I know it sounds crazy, but the Railroad Commission is part of the reason we have this strong industry today. And I mean, they were so good at what they did.
Operators, they protect the state. They're the protectors of oil and gas.
And basically, what I was told is OPEC actually, they mimicked and they looked at the Railroad Commission as the model of how to regulate their industry. And so really powerful. But of course, Railroad Commission of Texas, if you're not in the oil and gas business and you hear that, it just doesn't make sense. What would they have to do with oil and gas drilling? So,
and a funny tidbit to go with that: 20 years ago, 2005, the Railroad Commission no longer regulates railroad.
Is that right? Did not know that.
TxDOT handles that now.
Okay.
Yeah, so there is no railroad in the Railroad Commission anymore. But it's such, like you said, Aaron, such a powerful name. There's no reason to change the name.
Yeah.
Huh.
So,
wow.
So anyway, that's an interesting little tidbit about the Railroad Commission. You're talking about terms, and when I think of terms, um, I think to a couple of terms of an oil and gas lease. So let's just go straight to that. The oil and gas lease, that is kind of the contract that allows oil and gas drillers to do what they do. It basically gives them the option to develop a tract of land for a given time period. And they also have the right to like maintain that lease by drilling a well. And there's all kinds of terms that are stacked in the oil and gas lease. I've been doing this for 20 years. I'm still learning some of the nuances of oil and gas lease. That's the reason I love working here with Bill Phillips, who's our EVP of business development. He knows everything about the oil and gas lease and can dissect it. So if I have a question about a certain term or provision, I don't have to go far. I just walk down the hallway and talk to him about it. But here's one thing I do want to mention about oil and gas lease. For somebody that's never been in the industry, they'll hear it. They might hear somebody say, hey, what about that oil and gas lease? Well, to me, it means a couple different things. It can mean this contract, but it also can mean once Kelly's come in and drilled this well and it's producing, you'll hear people referring to that, oh, that oil and gas lease. So I know that sometimes people get confused. If they heard oil and gas lease, they don't know, is he talking about the physical piece of property that's already developing, or is it that contract? So, I mean, but I can tell you what, the oil and gas lease has so many different parts to it that are really important. And, so anyway, is that kind of what you're asking a little bit?
Yeah, no, that's really good. I was going to say, a couple of things. The Railroad Commission, yeah, very interesting. But I think, regulations, although they can make things challenging, regulations make things work. And, living in a developing nation, like I lived, overseas, most people know that for almost 15 years. And when you live in a place that doesn't have regulations, you watch the destruction of many things, especially resources. And so although challenging, and I was going to come back to that, Aaron. So they actually keep a log, right? They have basically like a registry of all the wells in that area or that have been drilled. And that's public knowledge. Is that correct?
Sure. You can go to the Railroad Commission's website, and it has so much data. There's all these other services that pay a lot of money. People pay a lot of money to have access, but you can actually get so much of that data right off the Railroad Commission. Like when somebody asks me a question about a certain well, and it might be well that King doesn't have anything to do with, it might be in some county we're not even really working in, but I can go to the Railroad Commission, and I know now. I've been playing on that website for 20 years and learned so many things. I figure out how much a certain company, how much oil they're producing. Anyway, it's a great tool, and that's where we go to find that.
We design our wells off that. We drill our wells off of information from the public record. We don't have access to the company B across the fence, but that about 40% of their data has to be published to the state, whether it be 2024 or the oldest record I've ever looked at in the state. I worked on a well from 1934, and I was able to pull find scanned documents from 1934. It's really cool. It's kind of like a Indiana Jones research project, But we've acquired wells or want to drill an offset well, and like Aaron said, we get the lease data. The lease data and the well mechanical data is for every well ever drilled in the state is in that system somewhere. And again, 90% of that data is 100% free.
Yeah.
And public record, and thank gosh to the cloud and internet and access. You don't have to. Once upon a time, you had to call and ask for the records. Now it's all at your finger. I can research a whole field in an afternoon. That have never stepped foot in the county in my life.
Yeah.
No, that's remarkable. I mean, it is amazing that that's public. There's so much public information for making decisions in the oil and gas field. That's amazing. Aaron, one more thing I wanted to ask you about today is a term called orphan wells.
Mm-hmm. Well, let me tell you, that goes right back to the Railroad Commission. They're the ones that keep track of the orphan wells, and they're the ones that have different programs set up to get these wells plugged. But an orphan well is basically an inactive well. It's non-compliant. There's not an operator of record. And that's usually it, because what should happen is a well's drilled, there's the economic life of the well, and then you're supposed to plug the well properly so that there's no environmental impact. And but a lot of times, I mean, in Texas, so many wells have been drilled. It is unbelievable how many dry holes, how many old wells are still out there. But the Railroad Commission does a really good job of trying to keep up with that. But they also hold the operators accountable, as Jay knows. As an operator, you have to put up a certain amount of money. It's like a bond against just to be an operator. And it hasn't always been that way. I don't know if that was in the last 10 or 15 years. And mainly because of all these orphan wells is they want to make sure that if you are going to be an oil and gas operator, that you have the money to, you know, basically take care of that well for the full lifestyle. And that means plugging it. And plugging a well can be cost anywhere from $20,000 to $100,000. So I know Jay puts up a lot of money just so that
we do. And that's a good point. I mean, there's like, we have 30 wells right now that are kind of orphan wells. I could start a new company, get an operator together, throw them in that company, that operator, and just let it go bankrupt or just let it go whatever. And then those would turn into orphan wells. And then all of a sudden I'd be done with them. I wouldn't have to plug them, and then the state would have to worry about them. But I mean, we're never going to do that. I would never do that. Number one. But number two is that's what the state does to try to protect all the wells, because, you know, the average oil and gas well is probably 5-6 barrels a day. Not very much at all, right? Just those. And there's tens of thousands of them in Texas. It's crazy how many wells there really are in Texas. And a lot of them just don't produce very much. And we have a lot of them that we have right now that just don't produce anything. We bought them with a package, and we have them, own them, and we're going to you either have to go back into them and rework them, or you deepen them, or you plug them, or whatever the case may be. But it is. And I'll tell you, there's two things that I keep thinking about, Rachel, for next week or the next week. But I think about, and I think you and Bill and maybe Rachel talked about, sometimes you have surface owners that are not mineral owners. So you have people that come on and drill wells on the property of somebody that doesn't own the minerals. So they might have bought that place for one of the very first wells that King Operating drilled back in the 90s. We drilled a well out in Montague County. They had bought the property to retire on outside of Dallas, and they owned the surface, but they didn't own the minerals. And as Texas Road Commission says, hey, you know what? I can go out there and drill a well. I don't care if you own the property or not. Minerals is it. We're drilling for oil and gas on your property. And they got really mad. And they got mad because they bought the property and they thought that nobody would ever drill a well. And here we come along, you know, and drill a well on the property. But we drilled it and put the tanks where it didn't come in the lease. And we built them an incredible road. I mean, talking about bidding, we had our initial bid like 30, 40 grand on this bid to build a road into the drilling rig. And initially, it ended up being like $200,000 because we had to bring it in from another direction because they didn't want us to come by their house that they put together. I mean, it's like fights and fights and fights, but mineral owners and surface owners are could be two different people. The Bivens family owned both on the ranch up in Amarillo, so they're like, come on in and drill it, and they love us. I mean, yeah, they love us, and especially right now with the way the wells are turning out. So we're really excited about that. But also thinking about, Rachel, for next time, maybe what about hey, if somebody tells you I'm in the oil business, what does that mean? Because how many different ways can you be in the oil business? I mean, there's upstream, midstream, downstream. That's 3 categories. There's probably 300 different ways that you could be in the oil business in each one of them. So maybe we could break down something like that for your listeners next time.
Yeah, that would actually be a very good show. We could probably do a few shows on that because it's such a vast and wide topic. I can't believe we're already at 30 minutes today. Wow.
Yeah.
So I want to talk about the orphan wells one more time. I want to mention that the Railroad Commission, did they come up with that name, Aaron?
The Railroad Commission?
Yeah.
The orphan. Well, like I said.
Did they come up with this term orphan well?
Yeah, probably so.
That is the most brilliant branding. I feel bad for the orphan wells.
Well, I kind of do too.
Yeah, they're orphans.
I actually feel bad.
No love. They get no love. Man.
The orphan wells are just out there abandoned. I feel like we need to do something about that. But that's fantastic branding on the Railroad Commission's part. So we're already at 30 minutes today. We didn't even get through all of our questions. So that means you definitely need to join us back here next Wednesday for the oil and gas rundown. Of course, I want to mention Jay's book. If you don't have this, The Upside of Oil and Gas Investing talks about Jay's legacy, our company. It's right behind him. It talks about our model here at King, how we're different and unique. We're really bringing a private equity model to the retail investor. So you definitely want to get your hands on this. You can find it at kingoperating.com. You can leave a comment below, anything like that, but you want to get your hands on this book.
Yeah,
Okay?
any questions? I was saying, any questions that you have, we'd be glad to answer them, because there are no dumb questions in the oil business from my standpoint. I was at dinner last night, and that's why I'm dressed like this. I just came in from Ontario, California, with a dinner last night with a lot of really smart guys and very wealthy guys, and they said, I hate to ask this question because it seems like a dumb question. I go, hey, look, I've been 4 generations in this thing. I know there's a lot of questions. Ask me away. There are no dumb questions. So if you do have questions, please, down below, ask your question. We'd be glad to go over it. I love teaching the oil and gas business. It's a fascinating business. It's not as hard as what people seem to think it is, and it is a great business. We have an incredible model. You need to find an oil and gas company, and don't do business with anybody that does the old traditional way that is in my book. Find somebody that's good, that has a good model that you can make some money with. I'm excited about that. I'm glad you're excited about that. We're just elated out here. Got a couple of wells that Kelly brought in. In Amarillo, the gas flare. Hey, those gas flares that we had before were just that was when the wells were just barely turned on. I can't imagine right now those gas flares are a little bit higher. I wonder if you can get a copy. Can you get a picture of one of those or get a video?
We'll get you one. I'll get you an updated picture. Yes, sir.
Yeah, awesome. Wells are coming in really good. We have a room to drill hundreds of wells out there. We're only going to drill 20. But anyway, that's it. I could go all day long about that kind of stuff.
We got good stuff going on. If you want to learn more about our projects, we have an incredible fund happening right now that Jay's talking about. Amazing location and just a great opportunity if you've ever considered getting into oil and gas, or you really need a tax advantage for 2025. Make sure to talk to us. And Jay, we're going to start our new philanthropy project, Save the Orphan Wells. Just kidding.
Save. I don't.
Hey, everybody.
No interest. Hey, I mean, you can adopt. I guarantee you could adopt as many orphan wells as you wanted to from the states or from the Railroad Commission. The state will give them to you for free, but you have to take on the plugging liability. So I don't know. Talk about philanthropy.
Yeah.
Okay, yeah. If somebody gives us the money, we'd be glad to, but that's about it.
Anyway, that project we'll save for later, but definitely make sure you join us next Wednesday, same time, right back here. We'll see you then.
Like
Thanks,
save
gentlemen.
the wells, like save the wells, save the orphan wells. Yeah, there you go. Save the wells.
There's a company that has a bumper sticker. Save the wells. WELLS.
Save the
I'm
wells.
looking for the stick. I'm going to get you
Oh
one of those
my
stickers.
gosh.
Oh my gosh, I love it. I need
Rachel would love to have one. Rachel would love to have it.
one.
Thank you, everybody.
All right, everybody. Thank you.